This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe giving you a stock market update for Friday morning. And what I'm going to do today is talk a little bit about these market conditions that are shifting. There's a couple things taking place this week that I think are pretty critical. One is the sentiment and the other is the volatility. We're going to get into those and see just how important they are. One key thing has not changed this week. It's something we have to watch very closely. So let's go ahead and get into this now. Before we do, let me just mention that if you're interested in learning more about these techniques that I use related to MACD, ADX, and multiple time frames, I suggest buying the book. I'm offering at a discount right now. If you go to rabilstockresearch.com/book, you can get more information. So I've got this Excel spreadsheet. I like to use this just to show that anybody can do what I'm doing here. And I've color-coded this thing, but I think it's a really good idea, and I know some of you are already doing this, is to track your own, see, and maybe even compare each week to what I'm doing and see if you're in line with what I'm thinking on the different indicators. I think that's a good little test for you. But you want to be able to see these things on your own, right? I mean, I'm trying to show you how to look at the market conditions for the S&P. We also want to, when I get to the trend and momentum, you want to be able to do this on individual stocks on your own, all right? So let's just start with the sentiment. I use Investors Intelligence Sentiment Survey, and the bulls have jumped again. They're at the highest level they've been in this run. And in a few years, really. The difference between the bulls and the bears is at 41%. That's a jump from 37% last week. But the fact that the bulls are getting close to 60% is definitely something we need to be paying attention to. And I definitely signal that as a negative. When I start to put the numbers together and say, you know, where do these things qualify, positive, neutral, negative, I would definitely put the negative on sentiment right now. Overbought, oversold. So I use a weekly RSI 5 for that. And you can see where we were oversold back here in August, September, and made a big jump and then tried to pull back. But only briefly. It was only a 1 week pullback, and then now we're at another new high, and and this is actually, if I round up, we're at 90. So that's a big number for an RSI weekly. Something we need to be aware of, because it's just the odds of this continuing to. I mean, obviously, overbought, oversold, you got to be careful of, right? You can't assume, you don't just short because it's overbought, but I do think we have to recognize that it's getting late. It's a mature trend when we get up into these levels. All right, we still need price to determine when there's a reversal. All right, and then let's just go through these really briefly, and then I'm going to move this chart away so we can look at the actual S&P. So the daily volatility has moved to negative. I'm going to show that in a second, but you can see the weekly hasn't really changed. And then both trend and momentum for all three time frames are still positive. All right, let's go ahead and take a look at this. So first, let's look at the volatility on the weekly. So this is the moving average, and it is moving down. I just created this. So this is off a little bit, just so you know. I'm using an ATR 15. It should be an ATR 20, all right? But it doesn't really change anything. There's still an increasing volatility on the daily chart, and the volatility on the weekly is dropping. All right, so apologize for that, but the reality is that it doesn't really make much of a change. This is a slightly rising line, and the current ATR is above it. So we've got a little bit of elevated risk on the daily chart, and we still don't have that on the weekly. We still have a pretty good condition in place. So the way I look at it is we're at greater risk of breaking the 18-day than we are of breaking the 18-week. All right. So if we were up here and all of a sudden we start to see big bars start to increase dramatically, and that causes this to move up, then I think this 18-week could be at risk of being broken. Okay. Right now, I actually think the higher probability is we break the 18-day at some point in here and we work our way back a little closer to the 18-week, but then we potentially could move up again. So that's kind of just based on what I'm seeing here, not looking at the trend and momentum yet. That's kind of how I would see this at this point. Now, one of the things I do like to look at, and you can see it on this chart, I've got all the 18s up, 18 week, 18 month, 18 quarter, and 18 year. Now, when these lines are all together, you have very, very limited risk. You can be an aggressive long-term player and really feel pretty confident that you're probably starting some pretty significant move. The farther they get apart from one another, the more risk there is. So you can see these periods where the blue line is here. You see the separation between these? That's pretty significant, especially when we look at that compared to where we were back here, right? They're all together and now they're all apart. Now we're starting to get, we're not as bad as we were back in late 2021, but we're starting to get to that same point where there's a little bit of separation between all these. So, but you can see where we could easily pull back and go again and then maybe create a little bit more separation between these two lines. And then the risk goes up. So it's another good thing to monitor. Right now, I don't see anything too glaring there other than the fact that we've got an 18-day that's really pretty far away from the 18-week. All right, but good thing to keep an eye on. Okay, let's switch over to the different time frames. And what I wanted to do here was start out with the Russell. Just briefly look at the Russell. Look at this chart pattern. So when we talk about not buying extended patterns and buying something a little bit earlier in the trend, right at the start of the trend, we're here. I mean, if this market wants to go higher, I fully believe that we should see a lot of improvement in the Russell 2000 index. I really do. And I would expect that we're starting to see a tick up in the relative performance line. This index was up 2.5% yesterday. It trounced the other indexes. Okay, and 2 of the last 3 days that's happened. In fact, 3 of the last 4. No, it was 2 of 3 of the last 4 actually. But the one day the market was down, it got hit pretty hard. So, but look at this pattern I mentioned. I think it was a few weeks ago. Maybe it was on my Stock Talk show. This zero line reversal with low ADX, and we had improving green DI here. I mean, this is basically a 2 time frame signal right out of my book and course. So a pretty attractive pattern. This is encouraging. I think that we could see improvement in the Russell and hopefully relative improvement here. If you're enjoying the content, hit that like button and also subscribe. Continuing to try and grow this channel, and your help here would be appreciated. All right, so I'm going to use the spider today. We know that we're trying to get through this 5,000 mark on the S&P, but I like to use the spider, just like to look at the volume pattern and all that. We are 4 months into a pinch play signal and getting a little overdone from that standpoint. So, you know, it's something we need to be aware of, although you don't just sell. Now, if we got a big expansion bar here, in other words, if this was the biggest, see this big bar here? If we got a bar like that right now in the last 2 weeks, if we pushed up and we got a massive bar, the size of this bar or bigger, then maybe it's the type of thing where I'd be looking to take some profits in some big winners that I have or something like that. Or if I were in the S&P. And if that's the case, then we're probably going to get a big green bar to show up here. All right, this is something we do want to be on the lookout for. You see the size of these bars, and this is why the average true range keeps dropping, because these are very quiet bars. There's no crazy movement. The biggest bar was the one off the low. That's really bullish, and from that point on. Now, if we get another bar like this to throw on top of this move after this extended run, then you should be on the lookout for some kind of a reversal. So that's really what we should be watching for. Now, if that's going to happen, then the daily chart is going to jet away from its 18, because right now it keeps testing the 18, right? We're not testing the 18 on this time frame anymore, Okay, it's not. It's more. This time frame is in a surging market phase. It's not a sequential wave where you keep testing the line. All right, this is in a sequential wave pattern where we keep testing it over and over and again. All right, now one of two things is going to happen. Either we're going to come down and actually break this line, and this line is going to roll over. And if that's the case, then that increases the odds that we come down to the 18-week and test that. Or we're going to surge away from this line to the upside and not test it anymore, just like what we did here. And then this line, this 18 will likely take over. And the way we know that's taking place, something to be on the lookout for, is if we push higher and break away from kind of the channel. You can easily draw the channel on the daily. You will come and test. You'll make a pivot high and then make a pivot low at the 18. That'll be at new highs, though. It'll be at new highs. I don't have enough room on this chart to draw it, but we move up and then we come down to the 18 and make a pivot low, turn up, and hold the 18. Then you know that the hourly is now in command and the 18-day is no longer going to get touched anymore. We're probably going to keep running the hourly. Now, this is not necessarily a high probability scenario, but it is something to be on the lookout for, especially just based on how the market just doesn't seem to want to pull back at this point. So these are the types of things I'd be watching for. The key right now is watching this 18-day. I know I keep repeating myself, but there's nothing to do at this point. We're watching a controlling line. If that line breaks and rolls it over and causes the MACD to turn down and causes green DI to turn down, right? If we get all of that to take place, and the odds really increase that we're going to finally come down and test the 18-week. All right. Let me know if you have any questions. Thanks.